The markets just closed, but here's the truth. What happens over the next 72 hours could be the most significant weekend in silver market history, and almost no one is talking about it. You've heard about silver before, but this time it's different. Right now, while the U.S. markets are closed for the long weekend, the rest of the world is still trading fiercely, and it could flip everything you thought you knew about silver upside down. This isn't just another price move. This is a moment that could reshape the entire market. So why should you care? What does it mean for you? Stay with me, because in the next few minutes, you'll see why the next 72 hours are about to change everything. So let's break this down. On the surface, a long weekend might seem like just that. A few days with no action in the markets. But here's the catch. The U.S. markets aren't just closed for the holiday. They're locked down for 72 hours. That's 3 full days where the New York Stock Exchange, NASDAQ, and even the COMEX are completely offline. But this isn't a normal weekend. The silver market has hit new highs, and there's a gap in prices that's widening by the hour. In China, silver is trading for over $100 an ounce. In the U.S., it's stuck at $90. So while New York sleeps, the rest of the world keeps pushing forward. What happens when the markets that set the price for silver are shut down, but the markets that actually deal in physical silver are still open and trading? And here's the real kicker. What if the East, where silver is in high demand, starts to set the price for the West? If you're an investor, this could mean a massive shift in how silver is priced and traded, and it could happen in the next 72 hours. Here's the shocking truth. Traders aren't doing what they normally do. They're not rolling contracts forward. They're rolling them backward. This is a move I've never seen before in my 12 years as a commodities analyst, and it's telling us something huge. Let me break it down. Normally, when a contract nears expiration, traders close out their positions and roll into future contracts, moving into months like March. That's how things are supposed to work. But on January 7th, the data shows something entirely different. Traders are moving their positions from March back into January and February, months when delivery is supposed to be minor. Why? They want delivery now, not later. Think about this. Traders are willing to pay the high cost of backwardation, which is expensive, just to get their hands on silver ASAP. And here's where it gets disturbing. On January 8th, a massive 8.12 million ounces of silver were demanded from COMEX vaults. That's a huge red flag. And it's all coming from one bank, JP Morgan, which issued 99% of those deliveries. One bank delivering all that silver to multiple receivers. Now, why does this matter? Because the supply is already stretched thin. And if these trends continue, we're looking at a potential collapse in the physical market. The paper market could lose control, and when the markets reopen after 72 hours, that's when we'll see just how fragile things really are. The situation is rapidly escalating, and it's not just a small blip on the radar. What we're witnessing right now is the market inching toward a breaking point. Think about it. In the past, traders rolled positions forward with ease. It was routine. But now the opposite is happening. Contract rolls are happening backward, and the demand for physical silver is reaching unprecedented levels. This isn't just a quirky anomaly. It's a sign of something bigger, a systemic shift that mirrors past market crises, but with a crucial difference. Take a look at what happened in 1980 during the Hunt Brothers silver squeeze. Silver shot up from $6 to $50 in less than 12 months. Most of that came in a final frantic surge. The markets got out of control, and the exchange stepped in, hiking margins and changing the rules to put a stop to the squeeze. But this time, there's no single villain to point at. This is a decentralized global situation. Sovereign wealth funds, central banks, and industrial buyers are all scrambling for metal, and that's before you even factor in retail investors who are stacking silver coins. This is where things get unsettling. The demand is real, the supply is disappearing, and the market is on the edge of an explosive shift. And now, with this 72-hour blackout, the pressure is building faster than anyone expected. Now let's talk about the real danger here. The gap between the paper market and the physical market is widening. While the U.S. market is locked down, the rest of the world isn't waiting, specifically China. Over the past few weeks, we've seen the Shanghai premium grow from $5 to $10 per ounce, and that's a huge deal. What does it mean? Simply put, the price in the East is climbing far higher than in the West. And here's where it gets even more intense. The Shanghai market isn't a paper market. It's a physical delivery market. When someone buys silver on the Shanghai Futures Exchange, they're not buying a promise, they're buying metal. And that metal is staying in China. With the new export rules that went into effect on January 1st, refined silver cannot leave China. This creates a dangerous disconnect. The Eastern markets, driven by industrial buyers and sovereign funds, are bidding up the price of silver, while New York sits idly by. So what happens when New York reopens and realizes that the price gap has expanded? The U.S. markets will either have to catch up, or the paper market will face a meltdown. Now, let's be clear. This isn't just a hypothetical scenario. It's happening right now. And the gap is only going to get wider as long as these markets stay disconnected. Now, let's stack a few key developments because this situation is moving fast. The Shanghai market is surging and the gap between paper and physical prices is widening. Meanwhile, the silver inventories are rapidly depleting. COMEX vaults are emptying at an alarming rate. And even with the markets closed for 72 hours, that pressure isn't going anywhere. In the meantime, global headlines are already heating up. Geopolitical events, policy shifts, and major central bank statements could all change the game while the West is asleep. These developments don't have to wait for Tuesday. They could trigger a surge in safe haven demand that hits the East first. And don't forget the gold market. Gold and silver usually move together, but silver is much more volatile. If gold pushes even higher over the weekend, silver could follow suit, pushing the price even higher and creating more chaos. And then there's dealer inventory. If premiums on physical silver spike, it's a clear sign that demand is exploding. When retail buyers rush in, they push the entire market into overdrive, and that pressure spills over into the COMEX. So here's the question. What happens if this continues? What happens if the pressure doesn't stop after the 72-hour blackout? We're on the verge of a massive shakeup, and what happens next could be the tipping point. Now let's shift focus. What does all this mean for you? For the average person watching this, it's easy to get lost in the numbers and the charts, but the reality is much more personal than that. Imagine this. You're trying to buy silver, but the price keeps climbing faster than you can keep up. Dealers start running out of stock, premiums surge, and you're left watching as prices race beyond what you thought was possible. For many, silver isn't just an investment. It's a hedge against the chaos of the world. It's a way to protect wealth, especially when inflation is on the rise and markets are unstable. But now, getting your hands on silver is becoming a struggle. And it's not just retail investors feeling the heat. Industrial buyers are now fighting for every ounce of silver. Solar panel manufacturers, electronics companies, and electric vehicle makers are all scrambling to secure their supply because they need silver for their products, and they know how valuable it's becoming. So as demand surges, the price gets pushed even higher. And as you sit there trying to make sense of it all, you realize that what's happening isn't just affecting Wall Street, it's affecting you too. If this situation feels familiar, if you're already seeing prices spike and shelves emptying faster than you thought possible, drop a comment below. You're not alone in feeling the pressure. Here's where it gets deeper. This isn't just a price spike, it's a glimpse into a much larger system at work. What's driving this surge in silver prices isn't just supply and demand, it's the mechanics of global finance, leverage, and fear. The pressure we're seeing isn't random, it's the result of a carefully built system that's now starting to crack. Take a step back and think about this. The reason the East is driving the price of silver higher while the West lags behind is because the physical market has far more influence than most investors realize. The markets that trade physical silver, like Shanghai, don't care about paper contracts. They don't care about promises. They care about getting the actual metal into the right hands. And with China's new export restrictions, there's a huge wall blocking silver from flowing freely into the Western markets. This wall is why the price difference exists. Eastern buyers, with their demand for physical metal, are bidding up the price. And that's pushing the West into a very uncomfortable position. The system is breaking down. What was once a smooth, reliable market for silver is now shifting into a high-stakes game where those holding paper promises may find those promises worthless when it's time to collect. The silver squeeze happening right now isn't just a financial anomaly. It's a systemic test. It's testing the market's ability to maintain credibility when the physical market is telling a different story than the paper market. And if this price disconnect keeps widening, it could change how markets are structured forever. So what happens next? Let's take a look at two possible scenarios. First, if the gap between the physical and paper markets continues to widen, it could lead to a dramatic shift in how silver is priced. As the Eastern markets continue to bid higher, the pressure on the COMEX and other Western exchanges will intensify. They'll have to either close that gap by adjusting the paper price or risk losing all credibility. But here's the flip side. If the price gap doesn't close and the pressure from Eastern buyers continues to mount, we could see a scenario where the physical market completely overtakes the paper market. And if that happens, it could expose a massive hole in the global financial system because for years, markets have been propped up by promises of physical silver that might not actually exist when it's needed. But there's no certainty here. Things could just as easily calm down. If the situation cools off, we might see the price level out and the supply chain might temporarily stabilize. But with the way things are accelerating, the window for that is closing fast. What's clear is that something is going to give. The next move is already in motion, and it's only a matter of time before we see which direction the market chooses to go. Here's the final piece of the puzzle. We're watching a moment in history unfold, and the choices made in the next 72 hours will echo across the silver market for years to come. This isn't just about prices. This is about the future of how markets work. If the East continues setting the price and the West is forced to catch up, it could change the way we think about commodities, price discovery, and even the stability of global financial systems. So what's the deep insight here? The old rules might not apply anymore. The 72-hour blackout is a test for the entire system, whether the paper market can hold up under the pressure of a physical market that's demanding more than it can give. If you've been waiting for a signal that silver is entering a new phase, this might just be it. And here's the thing, you'll be the first to know how this plays out. Make sure you're subscribed because I'll be back with a full breakdown on Tuesday once the dust settles and we know exactly what happened while New York was asleep. Don't fall for the mainstream headlines. Don't let fear or uncertainty make your decisions for you. Trust the physical because when all is said and done, it's the only thing that really matters. Stay sharp and I'll see you soon.